morning, dear students. My name is Nanda Kishore, Assistant Professor from the Department of Commerce and Management, K.B.N. College. Today I am going to explain the concept of purchase of business in our advanced corporate accounting. Okay. In this chapter, we are going to discuss about the guide how to valuate, how to do the process of valuation, and how to determine the purchase consideration, and what are the methods available to evaluate the purchase consideration, and journal entries and realization of other items. Yes, first of all, the core concept of this chapter is purchase consideration. According to Accounting Standard 14, what is meant by purchase consideration? It is nothing but the aggregate of the shares and other securities issued and the payment made in the form of cash or other assets by the transferee company to the shareholders of the transferor company. That means nothing but the transfer of shares and mode of payment made to the purchasing company by the selling company. Transferor company means the company who purchases the company, and transferee company means the company who is going to be liquidator or the vendor company. What does this mean in practice? Yes, what is that? What is meant by purchase consideration? It forms the absolute financial foundation for accounting entries, corporate asset valuation, and evaluation of goodwill or capital reserve. Yes, we are going to discuss about at the time of valuation of purchase consideration. Sometimes there might be a chance of raising of goodwill or capital reserve also. So in this chapter, we are going to discuss about the raise of goodwill and capital reserve too. It signifies the exact total exchange value settled between the buyer and the seller for transferring ownership controls. One company is purchasing and another company is selling its business to the another company. So at the time the settlement between these two companies plays a vital role, and the transfer of such ownership also we will discuss. Crucially, it focuses solely on payment to the transferor company shareholders, excluding external liabilities or structural vendor expenses paid independently. Yes, in this chapter we are going to discuss about the payments made to the shareholders of the vendor company. Yes, excluding external liabilities or structural items. Yes, what are the key characteristics of purchase consideration? Here, the total value transfer plays an important role. That means it represents the holistic value bundle passed from the acquiring entity to the vendor company's owners. That means the amount of the value of shares or debentures, or the amount which is transferred to the vendor company from the purchasing company. And multimodal settlement. Yes, the purchase consideration may be made in the form of cash or equity shares or preference shares or promissory notes or any other mode of assets. Contractual agreement. Yes, let us discuss, must be formally derived from and ratified with the definitive execution sale or merger agreement. In purchase of business, yes, there were two methods: amalgamation in the nature of merge and amalgamation in the nature of purchase. So that based on that, there must be an agreement between these two companies. That means vendor company and purchasing company. Why precise calculation matters? Why should we ascertain the value of purchase consideration under purchase of business? Let us see. Valuation benchmark. It serves as the absolute structural anchor for recognizing the fair value of acquired business elements. Yes, what matters? We should evaluate the value net assets of the company. Based on that only we are able to sell the company or we are able to purchase the company. So it requires absolute structural anchor for recognizing the fair value of acquired business by the acquired business elements. And goodwill and reserve calculation, sometimes the net assets value may be more than the purchase consideration or maybe less than the purchase consideration which is agreed according to the agreement. If the purchase consideration is more than the net identifiable assets, it is called goodwill. If the purchase consideration value is less than the net identifiable assets, it is to be called as capital reserve. And tax regulatory implications directly drives capital gains evaluations, transfer of stamp duties, and structural statutory taxes compliance metrics. Whenever we are going to liquidate one company and we are going to acquire or we are going to sell the company, there must be some rules and regulations must be followed, which are known as tax regulatory implications. At the time of purchase of business, we should go through this. And financial transparency, it provides clean, auditable disclosure streams during intensive stakeholder assessments and public reporting cycles. How the payment is made and how the purchase consideration is evaluated, and what are the internal rules and regulations, and what is the agreement between these two companies. We may come across all these, and all these items will provide some financial transparency also. Next one, the structuring matrix and core payment types. Yes, let us discuss in which mode the payment is going to be made. For example, cash consideration, direct liquid settlements via bank transfers or instant cash reserves. Sometimes the purchasing company make the payment of purchase consideration in cash mode, or share-based issuance. Yes, the vendor company may be issued the equity shares in the purchasing company at the time of amalgamation or at the time of purchase of business. And deferred consideration, sometimes the mode of payment may be delayed for a few days or for a few months or over a timeline, often contingent on performance milestones. Deferred means delayed, sometimes after some time, because according to the agreement the payment may be made. And sometimes there might be a combination of various items. That means the purchase consideration may be paid in the form of cash or in the form of assets or in the form of any other assets. But sometimes the payment may be made by using all these resources at the time. And there are a few methods while calculating the purchase consideration. One is lump sum method, yes, and another one is net payments method, and another one is net assets method, and another one is intrinsic value method. Under lump sum method, the payment will be given directly within the problem. There is no need to evaluate or there is no need further calculations. But in case of net payments method, the all aggregate payments made by the purchasing company are added to find out the purchase consideration under this method. But under net assets method, the assets which were taken over by the purchasing company at an agreed value must be taken, and all the liabilities which were owing to the third parties and which were agreed by the purchasing company to take over should be deducted. By deducting the third party liabilities which were agreed by the purchasing company from the agreed value of the net assets which were taken over by the purchasing company. Intrinsic value method, under this method intrinsic value of the shares will be find out, and based on the exchange ratio of shares the purchase consideration is going to be made. And calculations under lump sum method, under this method transpires when both buyer and seller agrees upon a fixed or single or rupee or dollar as the entire purchase consideration during negotiation. There would be a discussion between the purchasing company and the vendor company, and they came into a conclusion that at what price the company is going to be purchased, or at what price the vendor company is offering his company. That lump sum method That lump sum method is considered to be purchase consideration. It requires no further complex internal balance sheet items, adjustments, or asset valuation mathematical extensions, because a single digit figure will be mentioned within the problem. For example, Alpha Corporation acquires the complete retail business operations of Beta Private Limited for a definitive, and please look at this, mutually settled transaction amount 10 lakhs. Now Alpha company is going to purchase the Beta company, and the agreed value of sum and agreed value of amount made by the Alpha company, offered by the Alpha company to Beta company is 10 lakhs. So the purchase consideration itself, it is 10 lakh rupees as per the agreement. And next one, calculation of net payments and calculation of purchase consideration under net payments method. Under this method, the amounts paid by the purchasing company to the vendor company or sum are added together to find out the purchase consideration under this method. Look at this, add all individual payment allocations made explicitly to target shareholders. The amounts or the items which were made available or which were paid to the shareholders of the vendor company are added to find out the amount of purchase consideration. Under this method, assets and liabilities of book value or agreed values are completely irrelevant to this calculation. Only we should consider the mode of payments to find out the purchase consideration. Include all targeted equity shares, preference share distributions, and cash disbursements. So the mode of payment or the mode of receipt must be maybe in the form of equity shares or preference shares or cash in the cash form. By adding all the payments made by the purchasing company to the vendor company are to be considered as purchase consideration. Do not add liabilities taken over to be paid later. They are not shareholder consideration elements. And we should also remember, do not add liquidation or winding up expenses paid on behalf of the vendor company into this calculation. So two items must be considered. Do not add liabilities taken over to be paid later by the purchasing company, and do not add liquidation expenses to be paid on behalf of the vendor company by the purchasing company. We should consider only the targeted payments made by the purchasing company to the vendor company. And under method 3, net assets method, under this method we have to find out the net assets of the company. How can we calculate the net assets? That means the value of purchase of business. Under this method, purchase consideration is equal to agreed value of assets taken over by the purchasing company minus agreed value of outside liabilities taken over by the purchasing company. So the assets which were agreed by the purchasing company to be taken over, and we must deduct the agreed value of the liabilities which were taken over by the purchasing company. By deducting the liabilities taken over by the purchasing company from the assets taken over, we are able to find out the net assets of the company. Assets include all tangible, intangible, and cash holdings. We should ignore which type of items, fixed assets, that is debit and debit balance of profit and loss account, etc. Liabilities covers, which means the liabilities are all third-party debts. That means payments to be made to the outsiders of the company or outsiders of the business. That means payments to be made to creditors, bills payable, bank overdraft, tax provisions, etc. These are all to be considered as third-party debts. And accumulated profits. Accumulated profits generally directly belongs to the shareholders of the company, so we should not consider accumulated profits, or we should not taken into accumulated profits while calculating the purchase consideration under net assets method. and employee funds, provident fund, savings fund, workman compensation fund, etc. All these items belongs to the third party obligations, so they must be included while calculating the purchase consideration under this method. And another method, and fourth method is intrinsic value method. What is the difference between net assets method and intrinsic value method while calculating purchase consideration is, in net assets method we are deducting the liabilities which are to be paid to third parties. At the same time, here we should also consider the preference share capital. Also, we should take into account preference share capital also while calculating the intrinsic value of the share. Yes, determines the actual share swap or exchange ratio by evaluating the intrinsic value of equity shares of both the targeted and purchasing entities. Intrinsic value calculation formula is given below. Total assets minus outsider liabilities, and you should remember, in addition to the outsiders liabilities, we should also consider preference share capital while calculating the purchase consideration under intrinsic value of the share. So after deducting the outside liabilities and preference share capital from the total assets, the balancing amount should be divided by the total number of equity shares to identify the intrinsic value of the company. As the factors which will influence the purchase consideration under intrinsic purchase consideration: market value dynamics, the primary transactional pricing pivot, anchor based on comparable market data assessments. The factors that will influence our purchase consideration are market value dynamic, that means the changes which may expect in the open market, the asset condition and quality. The higher quality and higher durability of the asset leads to more value of assets, and the purchase consideration may be better than best. So the asset conditions and quality of the assets will influence the calculation of purchase consideration. At the same time, useful structural lifespan, the lifespan or the remaining life of the assets and other items will also play a key role while calculating the purchase consideration. And scarcity and proprietary values. Sometimes some unique items may be with the vendor company, that means intellectual properties or patents or copyrights or trademarks. If such scarce items are with the vendor company, it also plays a vital role while determining the value of purchase consideration. And factors influence the buyer and seller dynamics. One is bargaining power. Always the relative market leverage between negotiation teams governs the closing scale movement. All times the bargaining power of the purchasing company plays a crucial role, and the negotiations between the buying company, purchasing company and the seller company will also play a key role. And financial capacity and motivation, buyer liquidity richness versus urgent vendor operational liquidation triggers. Sometimes the vendor may be in urgency of liquidation or in the urgency of liquid funds. That times, because of the poor financial condition of the vendor, may sell the company some lesser than the market value. And the time sensitivity, accelerated operational transaction terms heavily compress acquisition settlement limits. Sometimes time also plays a crucial role while determining the purchase consideration. And what about the next items? Macroeconomic shifts. So inflation trends, monetary interest rates and variations, and active sector growth trends also play a key role while calculating the purchase consideration. And other regulatory and legal boundaries, something zone-wise constraints, antitrust statutory caps, and intensive environmental compliance metrics. These also play some key role while determining the purchase consideration. Due diligence outcomes. Rigorous pre-acquisition audit tracking reduces execution of risk premiums. And We are going to discuss about the discharge of purchase consideration after evaluating the purchase consideration under lump sum method or net assets method or net payment method or intrinsic method. When after solving the advanced academic problems or building corporate transaction structures under the net assets method, lump sum method, where precise payment asset breaks up are not explicitly detailed. Mandatory assumptions. Here we should remember that accountants must assume the entire purchase consideration is fully discharged through the issuance of equity shares by the purchasing company or transferring corporation at face value. If nothing is mentioned in which mode the payment is made, we should remember that the mode of payment or the amount was discharged only by the issuance of equity shares by the vendor to the vendor company by the purchasing company. Yes, these are some accounting entries at the time of purchase of business purchase account debtor to liquidator of vendor account, and at the time of taking assets and liabilities and the balance of goodwill or capital reserve. Yes, let us debit sundry assets individually at an agreed value, and let us credit all the liabilities at an agreed value, and let us credit the purchase consideration. That means which is due from the purchasing companies. That means business purchase account, and the difference between the net assets and the purchase consideration. If the net assets are more than the purchase consideration, the difference amount should be considered or transferred to capital reserve account. Sometimes the purchase consideration is more than the net assets. That means we are making payment in the form of goodwill, so goodwill account must be debited. And executing multimodal settlement to vendor regarding vendor liquidators. Sometimes the payment may take the form of so many items. Liquidator of the vendor company should be debited at the time of making payment to the liquidator. The payment is made in the mode of cash or bank account should be credited. If some equity shares were issued by the purchasing company to the vendor company, then equity share capital account should be credited. If the shares were issued at a premium, securities premium account should be credited. If some debentures were issued to the vendor company, such debentures account should also be credited. A specialized framework. What is the specialized framework? Collect outstanding liquid cash flows from the vendors, past debtors, and pay down third-party debts outstanding directly to the vendors' creditors. Earn Earn a structured percentage service commission passing all net cash variations, cash discounts, and cash collections and structural bad debt risk, etc. Then and burdens back to the vendor's personal adjustment pools. At this time, what is the journal entries? Vendor. Let me explain one thing. When the debtors and creditors of the vendor company are taken over by the purchasing company, and on behalf of the vendor company, the purchasing company is going to collect the amount receivable from the debtors, and the purchasing company agrees to make the payment to the creditors by getting some commission from the vendor company. In that time, opening memorandum incorporation, vendors debtors account should be debited and vendors creditor account should be credited, and the difference between these two must be transferred to vendor's suspense account. And if some cash is collected on some bad debts adjustments were there, bank account should be debited and vendor's suspense account to be debited to the extent of bad debts, and vendor's debtors account should be credited. And discharge of vendors creditors obligations, as we discussed that the amount receivable from the debtors would be collected and the amount payable to the creditors should be discharged. So we are going to discuss about the discharge of vendors creditors. So vendor creditors account should be debited and the payment made through bank should be credited, and if any discount is received from the creditors, vendor's suspense account should be credited. Booking service fee revenue. Sometimes after collecting the amount from the debtors and after making the payments to the creditors of the vendor company, the purchase company who offers such services will collect some commission from the vendor company. So in that case, as vendor suspense account should be debited and commission income account should be credited. And final settlement regarding these items after collecting the amount from debtors and making payment to the creditors and commission receivable from the vendor company. So after ascertaining or consolidating all the previous items, now we are going to make payment to the liquidators of the vendor company. Vendor suspense account should be debited. If some amount is paid in bank account should be credited. If any debentures were issued, debentures account should be credited. If some shares are issued, shares account should be debited. Summary conclusion: by applying these these comprehensive advanced corporate accounting methods and standard journal scripts accurately. Okay, thank you, dear students. I hope you understood well.